So welcome everybody. Another webinar today, third in the series so far. So today we have Jon Corbett from Barclays, who's going to talk about the CBILS scheme and what that involves and how that works and things. So quite an important session, I should imagine. I'd just like to point out that you know, we have a number of other webinar schedules as well. So on April 21st, which is next Tuesday, we have a business funding support webinar with Andrea Reynolds. So it's kind of like, obviously Jon is going to talk about CBILS today, but Andrea is going to talk about sort of what other things might be available and basically giving out some helpful advice in terms of, you know, dealing with cash flow issues that may well arise in the current situation. And then actually on the same day, on April 21st as well, at 4 o'clock, there's going to be another webinar run by one of our STC ambassadors, Shai Karnam, who set up a series of webinars all focused around, you know, continuity planning and business progression and things like that as well. So powerful stuff. So they, those are the sort of the next two that are happening. I'm talking to other people about putting more on as well. So you know, there'll be other ones on their way. The previous webinars that we've done so far are all available on our YouTube channel that you can watch. If you search Silverstone Technology Cluster on YouTube, you'll find them there, and you can always rewatch them there. And obviously we include them in emails and put them on the members forum as well, and things. So that's really kind of all I wanted to say. In terms of sort of housekeeping, we'll hand over to Jon in a moment, who will run through the slides from the British Business Bank about the scheme with us. In terms of questions, I mean, if we can kind of save those till the end, and then if you have any questions, if you can sort of use the functionality on the side of the screen where you can digitally raise your hand, and then obviously we'll switch over to you and you can ask your question. I mean, clearly, Jon is not in a position to discuss individual cases because obviously it's dependent on lots of different things, which I'm sure he'll explain. But certainly we can talk about sort of more generic things and support that's there. So with that, I'll hand over to Jon, and he can take it from there. So Jon, over to you.
Good, thank you. So hopefully you can see the screen now in front of you, which I've just shared. Pim, I'm sure you'll nod if that's the case. Can you see?
Yeah, I can.
See that? Okay, yeah. So good, and good morning, everybody. So what we wanted to do, and I'll run through, is really just an overview of what the coronavirus business interruption loan is about. There's a lot of mixed messages or understanding out there, so we'll try and sort of like run through that. We call it CBILS for short. So if I start referring to CBILS, that's the acronym for the coronavirus business interruption loan. And what I'll do is I'll give just an overview of that. That was a presentation the British Business Bank gave a few weeks ago through Clement Growth Hub. It was a few weeks ago, and there has been a few changes to the scheme since then. So I will highlight those within the presentation. Unfortunately, Lewis Stringer from the British Business Bank couldn't join this call, but he is aware that I'm running through his presentation. And then what I'll do is I'll give a sort of high-level general bank approach in terms of how we're looking at the scheme, or how we're looking at requests under the CBILS scheme. It won't just be from a Barclays perspective. I'm conscious to give that as a generic as possible in terms of a bank overview, but I might have a slight Barclays slant to it in some respects, but this isn't a Barclays call. This is a more general call than that. As Pim alluded to, we'll then have an opportunity for Q&A, but also Mark Clement from GT, and also one of fellow board members for STC, is also available to perhaps cover off some of the questions that may come out from around producing financial information, etc. So hopefully that sort of sets the scene for what we're going to cover off. Just coming on to the first bit, which in terms of the agenda around the CBILS scheme. So this is what we'll sort of give an overview of what it's about, what the benefits are, and some bits around eligibility, which is really important for businesses to understand also. So what is the scheme? So this was introduced, and Obviously, it was announced initially by government around the, I think it was around the 18th of March, by the Chancellor, and it's one of these situations where we were running around frantically to get the scheme in place, and there was a lot of work going in over the following days to enable the scheme to be launched by the British Business Bank on the 23rd, Monday the 23rd of March. Now, normally when we're launching new solutions of this nature, it does take weeks, if not months, to get things in place. So, it was frantically put together and pushed out. And that's why there has been a number of changes through the course of the following weeks in terms of what that scheme looks like. And we continue to have ongoing dialogue with government and the British Business Bank in terms of how the scheme operates and how it's working. It is designed, as alluded to, and a lot of the noise around is how we turn what would ordinarily or potentially be a no credit decision into a yes, and to provide support to businesses. We've already seen a number of new lenders who have been accredited. At the stage when this deck was put together, it was working on potential new lenders that were able to access the scheme. And I know from conversations I've had with Lewis and the British Business Bank generally, they continue to work on accrediting additional lenders as well. And what we have seen is a high demand or a high level of inquiries. And I'll come on to why it's inquiries and some of the information that we're asking for to enable us to look at those requests, obviously, in due course. But that sort of like gives I guess, a bit of the background. I guess then coming on to, what are the benefits to the scheme and what is the scheme really about? There is it's a facility that can be provided over a period of up to 6 years, and it is for the SMEs to access funding up to the level of 5 million. Above 5 million requirements, there are other schemes that are available, but the CBILS is capped at that level. Now, it's talked about the government backing this scheme. The government provides an 80% guarantee behind the lender's facility. So it is the bank that is lending. It isn't the government that lending. The government are providing a guarantee behind it. And that's important to understand because it is reliant upon us to undertake the credit assessment that we would ordinarily take in terms of providing a lending. It's sort of replaced, some people might have heard of the Enterprise Finance Guarantee Scheme, and this has sort of replaced that, and it sort of like replicates some of the functionality around it. But there is some additional amendments to it, for such as no guarantee fees that normally would be paid for provision of the scheme to the government. There isn't any fees required on that. And for the first 12 months, interest and fees are paid by the government. So there is no fees, arrangement fees or security fees for setting up the facility. It's interest free for the first 12 months. But after that, then there will be a commercial charge attributable to the ongoing loan. And there is the availability of capital repayment holidays up to the first 12 months, which will be agreed on original or initial application. So then, coming on to what those sort of terms look like. Now, the overview of the scheme is that it is available for loans up to 6 years, as I've alluded to, and also asset finance facilities. There is some working capital facilities, overdrafts and invoice finance that can be accessed under the scheme, but that will be different from bank to bank, whether they're utilising the scheme for those facilities. So it is different perhaps for individual organisations in terms of what funding package is available under the scheme. Now, the security aspect is where there's a change in terms of what was originally launched. So originally, it was at the discretion of the lender about whether they provided the facility up to 250,000 unsecured, and above 250,000, there was a requirement that we'd have to establish whether there was a lack of security before we could use the CBILS scheme. That's changed, and that's changed in the sense that now a lender does not have to establish there isn't security available over 250,000 before they use the scheme. They may, above 250,000, require security or additional security to be in place, but they don't have to look to that first before they can access the scheme. So that has opened up the scheme a little bit broader in context. What also has changed within that is that there's no personal guarantee requirements under 250,000, and that goes across all of the banks. Under 250,000, there should be no personal guarantee. There may be a debenture requirement, and certainly within some of what we do within Barclays, within certain parameters below that level, we may well, or we chances are we'll ask for a debenture depending on some of the levels of funding. We've actually taken a step further, and we've said actually a CBILS scheme, there is no personal guarantees, full stop. But that will be at the lender's discretion over 250,000. So hopefully that makes sense. I'm happy to answer any questions on that. If the lender does have a requirement for personal guarantee above 250,000, facilities above 250,000, then that guarantee will be capped at a certain level in terms of the facility. The other thing that's changed, the third bullet point, if the lender can offer finance on normal commercial terms without need to make use of the scheme, they will do so. That again has changed in the sense that actually where we were looking, if we looked at a proposal and we said actually in normal circumstances we would lend to this business without the use of or requirement for a guarantee, so we'd put it through, the bank will put it through normal commercial terms. That requirement has removed. So if we're comfortable around the serviceability and all the other aspects, then we can still use the CBILS scheme. And that's important because then that enables the business to access the elements, some of the features like the no fees, like the no interest in the first 12 months and some of the other features. So that requirement has been removed. So if there is a COVID-19 impact requirement on a business, then they can use the CBILS scheme to cover that impact. What I should point out though, and this is something that certainly I've seen in a few instances, the CBILS scheme is not therefore a scheme to access for businesses to fund future growth. What it is to address funding solution to keep that business or the survival of the business and address, keeping that business afloat, for want of a better description. It's not to replace other sort of types of lending for other purposes. An important factor to always come back to as well is the borrower always remains 100% liable for the debt. So just then coming on to some of the bits that I've sort of touched on. So for the first 12 months, there is no interest payable. The government will fund that and any fees that are charged by the lender. In terms of some of the smaller businesses, as I say, they will benefit from not having any of those fees. And we are looking at additional lenders obviously coming on stream for provision of those. So there is some ongoing discussions, as I've alluded to, that are ongoing with the scheme, and there is some changes and amendments that are taking place. But one of the things that is also in there is that a lot of lenders, and certainly something that we've adopted, is there is no early repayment charges if the borrower does repay the lending under the scheme earlier than the agreed tenor of the loan. Now, this is some of the key bit as well, which I will come on to in terms of the sort of the bank approach around eligibility and flexibility, etc., and what the bank will look for. So the first point is really important around the viability. So, what the business must demonstrate. And I look at this from the point of view of the serviceability is the look back in terms of what is the financial performance, and it was a sustainable business and a good business prior to the pandemic crisis. But also we need to be comfortable and established that actually through the provision of the finance that the business will be able to trade out of the pandemic, and once we're returned to some sort of normality, that they are able to actually access that. Apologies, I should have put my phone on silent, shouldn't I? so that's important in terms of some of that assessment. It is a loan, so we do need to actually understand in terms of that serviceability. It's not a grant, so we do need to understand that both the business is able to afford it. It's not taking on debt that it can't afford, and also that it's got a strategy or it's got a plan to of how we can see it return back to some sort of normality in terms of trading. The lack of security bit I've sort of covered off as well, because that was a change to the scheme. In terms of facilities over 250,000, there may be additional security that will be asked, but it isn't a requirement to establish that there isn't security first and foremost. And then, of course, for facilities under 250, as I say, there is no personal guarantee requirement. What I should also point out is, under the scheme, then there isn't a requirement for individuals to put their houses up against the facility. That is a no-no under the scheme. And I know there's been a little bit of misunderstanding, shall we say, or miscommunication around that. So there shouldn't be, certainly under 250, no PEGs. And I go back to that point I mentioned earlier, that at Barclays, we've taken the view that no personal guarantees are required regardless of the amount. There are some additional flexibility around certain sectors, and I'd point to the British Business Bank website to have a look at that. But what there is also, and the bit that has been a lot of discussion between the bank and government, and the banks in general and government, is around state aid requirements, and there is some flexibility around that. But there is quite a bit of confusion around it. Again, I'll point you to the BBB website, but also, there is a requirement that the business will be able to attest that they do meet those state aid requirements in order to be eligible for the scheme. So then just some elements in terms of, I've referred to the British Business Bank website, but there's also some other information there that is available, and also some detail. I would always point to the government website for what other support is available, which again I'll come on to in terms of some of the way that the banks are assessing some of these requests. So that's a quick run through of the presentation from the British Business Bank. What I'll then do, as I mentioned, is I've just come on to probably a more generic view of how the banks are generally looking at the approach. And as I say, it is more of a general view, but it will have a bit of a Barclays lens to it. I guess the key message, and the key message that certainly within our organisation we've been key to give out, is if you were a good business in 2019, you're still a good business now. And you will still be a good business when you come out of the crisis. What does that mean, though, specifically in terms of the CBIL? If your business was viable before the crisis, as I've alluded to in some of that BBB presentation, and you meet the criteria mentioned, then the scheme can provide that financial support to help you through the current challenges. But the key bit is that the business is viable. And that is the look back into 2019 to, one, establish the viability of the business and the profitability of the business to service the debt, but also the look forward to go, actually, we can see the business has the viability to trade out the other side once we do return to normality, whenever that might be. And that I appreciate is a bit of a challenge, but it's a really good scheme. That's my first point. And we have had a huge number of requests since it's been launched, and we continue to get in inquiries. I think one of the things that we've really we really need to be clear on is it is a loan, and therefore we do need to assess it. And there has been, within those inquiries, perhaps sometimes a little bit of lack of understanding around that it is a loan, and we do need to demonstrate that it can be serviced. But the scheme was put in place really quickly, and I alluded to that previously. So we are learning as organisations and as an industry as we go along, and we're learning with our clients as well in that respect. And it's fast moving, so it is developing. So it is important just to keep tabs on some of those developments. Some of the major developments which I've alluded to were a couple of weeks in that they were implemented. as with all of the banks, their team of relationship managers, I'm sure, and I know within my team across my region, been talking to clients about the information we need to assess the eligibility and affordability, and that's some of what I'll come on to. And I know I've made the point a number of times, but it is a loan. It will be assessed largely based on 2019 trading. And we do need to understand and demonstrate the business will be able to pay it back, which as a responsible lender, you'd expect us to want to. So what do we look for, or what are some of the information? So the first point that I'll turn to is the amount and purpose. And that sort of seems obvious, you know, we'd be asking for how much you want and what the purpose is. But it is really important that all the other mechanics available have been explored, and there is a bit of science behind the request, i.e. what is the critical payments that need to be made, and how the business, or how the funds will help the business address that cash shortfall. As I mentioned, we would want to understand the turnover for 2019, partly because we're assessing the affordability, but also there is some criteria around what the amount that is available under the scheme based on some of the turnover requirements, 25% of turnover, and also what the annual wage bill was in 2019, together with number of employees, because that does cover some of the scheme requirements. We would want to know, has the business accessed other government schemes, and understand what amounts are available through, whether that be VAT deferment, whether there's been other grants involved, whether they're furloughing staff, and what the impact of that is. And we would expect to have that covered off in terms of some of the requirements and built into what that requirement might be. And we will need to understand why the borrowing, or how the borrowing is going to help and support the longevity of the business, as you would probably expect. The next bit is affordability, and that also comes on to, again, the understanding of the 2019 trading performance. And we might want some forecasts. Now, that's really hard to predict. You know, I get that, and I think we all get that. And I'll come up to Mark in a short while around how we can predict how long this is going to go on for, how long that the business is going to be impacted by the pandemic. But the key is to understand, as we do come out, or the pandemic is resolved, how long do the business owners see the recovery will take, and what will the challenges be for the business as it comes out the other side, and to have some rationale behind this. As I said, with the amount and purpose, you know, it isn't just a finger in the air, there is a science behind it, and it's also affordability. There needs to be an understanding of what the impact is, and how the business will trade out the other side. Now, I have mentioned a few times that we continue to look at the structure and the approach working with British Business Bank, and we have seen some amendments already to the scheme. But each case is looked at individually. It is looked on a case-by-case basis. And when we do look at it, and when we review the loan, we do apply normal criteria in terms of conditions, in terms of that lens that we initially look at, in terms of whether that lending is affordable for the business, and whether the business has viability moving forward. What I'd also just come on to as well, in terms of other things that are available out there, or other things that support that is available. The first bit is around capital repayment holidays. So where businesses have already got lending in place, we are seeing a high volume of capital repayment holidays to support, over an up to 12-month period, businesses manage existing debt, and we continue to see and support businesses in that way. And again, you know, that will be an industry element. Also, there are instances where perhaps the funding doesn't fit the scheme. So therefore, what we are exploring is their overdraft solutions, or other working capital solutions that we may be able to look at, that can support the business through the trading cycle. Where I would encourage any business owner is speak to their relationship manager, and speak to them early. The earlier that we're engaged, and the earlier we understand some of the factors that we've talked about, then the sooner we are able to help. But it will be on the basis that we do need to understand some of those elements that I've covered off. We have, and all the banks I know have introduced helplines available for business. We have on our website various information that is available to help businesses, including an eligibility checker for the CBILS scheme. So businesses can go on the website and just have a quick check as to whether they are eligible. The phones are really busy, as you would probably expect, and we're encouraging where possible to use other channels such as online banking or mobile banking. And for some clients, there are pre-assessed lending limits available up to £25,000 that businesses can access quickly and easily. And so for businesses that have that sort of mobile banking, online banking, it's worthwhile them exploring. Again, I'm expecting that other banks will have a similar process in that regard as well. But as I've alluded to, the volume of requests are high, so we're getting them through them as quickly as we can. But it is taking some time because, like any other business, we've been impacted by resourcing as well. But we are doing everything we can to get to those requests. The final bit that I'll also make in terms of the support available, because I think that's important to understand that entrepreneurs are also individuals, and they do have personal needs as well. So things like mortgage repayment holidays are available, or moving to interest-only payments. Credit cards, certainly within Barclays card, will not charge late payments or cash advances fees for the next 90 days. And there may be ability to access increased credit limits, as well as on overdrafts. We've arranged that there won't be any charges made on those, certainly through to the end of April, and that will happen automatically for anyone on a personal client with an overdraft facility. The final point that I will make and just reiterate is the bit I said at a short while ago. If you were a good business in 2019, you're still a good business now, and you'll still be a good business as you come out into 2021, and we are here to help. So that's sort of like the overview, hopefully from a point of view of what the scheme is about. Also in terms of what the banks are looking for in terms of the information to enable us to assess any requests. And one of the things that talked about there is around forecasts. And I know that is quite challenging in some instances, but it's important that there's some rationale and there is some science behind it, as well as what the requirement is. I thought at this point it's perhaps worth just handing the mic over to Mark, just to cover off. Mark, what can businesses expect from Grant Thornton or from other sort of similar organisations in terms of support around helping in preparing those financials?
Thanks, John. I think the first thing to recognise is that each business is very different, but underpinning that, as one looks forward, there needs to be a robust financial plan or set of forecasts which support that business going forward, and that plan clearly in the current times is going to be extremely difficult to pinpoint exactly where that business is going to go, and therefore what needs to happen is a sense of that model being flexed, or having the ability to run various scenarios against a base plan as to what the outcome may be over the next 3-6 months. So for example, us as a business, we are scenario planning, and we've been planning for all intents and purposes, a 3-month sort of lockdown scenario, a 6-month lockdown scenario, and assessing what the impact on the business is going to be over that period of time, and what actions we need to take to ensure that we still have a viable business as we come out the other side of the pandemic. It's important that any model that is constructed ideally needs to be, it's an integrated model, so it's all links together between the profit and loss account, the cash flow, and the balance sheet. But more importantly, that it's underpinned by reasonable assumptions as best they can be in the circumstances. But it is important, I think, also within that model to ensure that you are taking into account many of the points that John alluded to in terms of whether there's capital repayment holidays already agreed, whether you furloughed staff, just so that in that presentation of that model and plan to your funder that the story can be articulated clearly, and that there is a clear, definite need for the amount that's required to support the business in the current climate. Obviously, as you start to come out of that phase, one needs to plan in, what the impact on the business will be, maybe beyond 6 months down the line. So one shouldn't lose sight of, the medium-term nature of where your business is likely to be during the course of that period. The important thing, the important thing is to ensure that there is flexibility in that model that is prepared to enable, as I say, various scenario plans to be assessed as part of that presentation to your lenders. We, like many other accountancy practices and financial advisors, are here to support in terms of either helping businesses prepare and build those models, or indeed challenge management in the assumptions that they're making in pulling those financial models together. I think, as Jon has said, I think we're very much all in this together, and we need to support one another throughout the throughout this period of time. I mean, on a personal note, in my conversations I've had with various businesses, I've been impressed by the decisiveness that businesses have taken over this period. I guess the innovative thinking that is going on, and also the resilience that businesses are showing in what are truly very, very testing times. But I think working together, whether it's helping with on the financial planning side and having that dialogue early with your lenders, I think can only support those businesses going forward.
Thank you, Mark. I just have a quick sort of follow-up question to both Jon and Mark on that, because from a from a Barclays and from a lending point of view, I suppose ideally you would want people to come to you, with their projections and their plans, and a well-versed pitch almost that allows you to make a decision quite quickly. But not necessarily every company is in a position to do that. So obviously, they can turn to Mark and people like himself to help with that. But Jon, is there potential support available from the banks there as well? I mean, is it worth having a conversation with your client manager at the bank, and can they sort of help with that process as well, or is it ideally that they go to people like Mark and others to help with that? Sorry, where are you? Hang on.
He's down towards the bottom.
Technical difficulties there. Mostly operator error. There we go, Jon.
Am I off mute? No, it was I muted myself because there was a bit of background noise. I think someone mentioned about their dog barking earlier, and that's what I was trying to avoid. Hearing my dog bark. That's the point around engaging with the bank early, because actually it's about that discussion to understand how the banks can support, having that conversation around what can be included within the requirement. Are you accessing, or is the business accessing other schemes that are available? And that sort of more rounded conversation, as well as then looking at the discussion around what assumptions are you making, what are we seeing in terms of or what are we expecting to see, for example. And I use an example where one of our clients, a hotel business, and the hotel business is talking about when it will return to some sort of normality. Now we'll look at that and we'll go, well, if you're expecting that, the pandemic and the restrictions are lifted at the end of May, and all of a sudden everybody's going to be coming back to you in the normal way, actually we don't think that's reality. We think that will take a bit of time to pick up. So what we'll do, and a bit like Mark said, is start talking around, what are the levers that you can pull? What are the impacts that's going to make? And can we structure that in a way that helps you through until you do return to normality? So it is about those conversations taking place, as well as, what we will do is challenge some of the assumptions you're making, positively and negatively. I had a manufacturing business last week with one of the relationship directors in my team, where, actually the request was for facility, and they'd use their overdraft and their trade out the other side. And you actually look at it and go, actually, what you're lending, you're asking to lend, I'm not sure that's enough. because you still need to have a working capital facility available as you do trade out. So we're actually, it's not just about are we reducing the requirement, actually are we making sure you've got enough cash to come out the other side. And that was where the conversation went, which we actually said, look, for the right reasons, we think you might want to think about increasing the amount that you're asking for. So it's those sort of dialogues that can become quite protracted, and or feel like they're becoming quite protracted, but it's for the right reasons. Hopefully that answers the question, Mark, but I don't know if Mark's got anything to add on that.
No, what I'd say is I totally agree. I mean, I think there's there is very much the the short term cash flow requirements of the business. As I've got a business that I work with. It's a holiday park operator. It's fair to say they have no cash coming in. So they are living off their cash resources, and for them, it's very much around how do they manage the costs over that period to the point at which they start to think that actually business will start resuming. So for them, it's all about cost measures in the short term, furloughing staff, running the sites with minimal staff as they possibly can. But as Jon says, I think what people mustn't lose sight of is as they come out of that period of lockdown or inactivity, there is going to be a working capital demand on businesses as they start ramping up. If you like, the people that are currently furloughed come back onto the payroll. There's the impact of that additional cost while those revenues and cash coming in are still going to lag behind a little. And I think don't lose sight of that as we come out of this lockdown phase or this downturn in activity, because that is going to be a point in time where businesses are still going to have a real focus on cash, because my concern is that we'll end up in a position where some of those businesses may not make it through that period if we're not careful. So managing in that as we come out of the current situation is going to be key.
Excellent. Are there any questions by anybody? Please raise a little virtual hand so I can unmute you if there are. There we go. Edward, over to you.
Hi, it's a question to Jon. So if you have a current overdraft facility upon which you are paying interest and it has a level of security, can you simply use the CBILS scheme to swap it out for one that effectively is no interest and no security?
No.
And can you, there's a supplemental question. You talked about a need, demonstrating a need. Is a need, does it qualify if your need is you want a buffer zone because you think you might hit a spot where your cash flow will need the overdraft?
So the first point, the scheme isn't designed to refinance existing debt, or existing facilities. And actually we have seen that in some instances where it's almost perceived that this is cheap debt and I can release security that I might have as that's not what the scheme's designed for. The scheme is designed to support businesses that have critical payments to make and critical requirements to make, so not to restructure debt. There will be exceptions to that. Where exceptions, I've seen some instances where it might be that they're restructuring critical asset finance equipment, and it might be that there's a need to do that, but that will be exception. And there is some restrictions that the BBB do place on that actually in terms of refinance. So it's not for that purpose. So that's the first answer. The second answer is it's not designed to just provide a buffer. There needs to be some science behind that as to why there is a specific requirement, and it is designed to meet critical payments to enable the business to trade through. What that may do in terms of some of those assumptions, throw the need for a further working capital requirement that is based on some level of forecast. But it still comes back to the point that if we're doing that, we need to understand the affordability for the business and how that requirement will help them trade out the other side. And they are taking on debt that they can afford to repay. It's not there, as I say, for just a buffer in case of need. That's not what it's designed for. It does need to be some science and a requirement behind it. So hopefully that answers both the points, Edward.
Thanks.
Any other questions by anybody? Don't be shy. I mean, make sure that you walk away with all the information that you want from this one. That's very much why we're doing it. So don't be afraid. John, do you maybe have any other points that were raised on the initial briefing by the British Business Bank?
So I mean, a couple of the I've sort of tried to cover them off actually as we've gone through. There was some points around the personal guarantees, and also some issues around provision of security on people's houses, personal dwellings. That was very clear. That's not what the scheme shouldn't be asking for that. So that's been, I know I've read in the press and I've seen on other forums where there's sort of an indication or interpretation that the bankers will ask for that, but that is not part of the scheme. So that was one of the things that came out. I think the other bit that came out is, as Mark has touched on, the key around how you do provide that information, because we are in uncertain terms. Is it going to be 1 month? Is it going to be 3 months? How long is this going to go on for? And let's be honest, none of us actually know the answer to that. So we can't provide a crystal ball, unfortunately, in terms of what that might look like. But it is having that science behind and the methodology behind it, where you've made some assumptions and you're able to articulate those assumptions in a way that we can work together on. And I think that's the key. It isn't just a finger in the air to go, I think I might need X amount of money to see me through. There needs to be some science behind it to understand, because this, again, and I made the point earlier, the purpose of the loan is it sounds negative, but it's to help businesses survive. And so we need to understand how that will play through.
I think there's also a need just to demonstrate that the business has actually considered all the risks that potentially impact that business, in terms of in discussions with your bank, particularly around whether it's supply chain, whether it's customers, whether it's people, whether it's facilities, but just thinking through all the related impacts that may flow from that, and how that is impacting in terms of those financial numbers which are being presented to your funder.
And just on that point, again, a point that I made earlier, it really is important that a business has explored what all those other support mechanisms are available, whether that be they furloughed their staff and they're accessing the government scheme there, whether they've got rent relief or rates, grants access, those sort of things. It's really important that there is an understanding of what other avenues has a business explored before it is actually coming down to take on additional debt.
So with some of the conversations that I've had with Make UK, there's been other associations saying that some of their members, have been having difficulties accessing it and stuff. But it sounds to me that mainly, isn't necessarily a fault of the scheme or anything like that, but it mainly comes down to sort of individual cases and being able to, prove the need and the necessity of it and make a sound business case. Would that be a fair assumption? Because I mean, it obviously depends on all the individual circumstances, right?
There's case by case basis, and it is very much, there'll be scenarios where, unfortunately, the business can't demonstrate affordability, and that's the scheme is designed to support where possible, but it won't be right for everybody, and it won't be right for everybody to take on additional debt. So there can be instances like that. Let's not beat around the bush on it, so to speak. But certainly in terms of the conversations that I've had and what I've seen, there is some great examples of businesses using the scheme and where we're able to support. There's some great stories around how we're able to provide support through capital payment holidays and those sort of functions to minimise impact on cash throughout the pandemic. But there will always be situations, and it's case by case basis. And I think that's the key bit I would.
Yeah, I get the impression a little bit as well that you know, there's some people out there thinking that, you know, it's basically sort of free, easy money, but there's no such thing, is there? So I think you need to be quite realistic with your expectations, sort of going in and being able to demonstrate that sound business case, because without that, it's never going to work, right?
It's a loan, isn't it?
Yeah.
You know, at the end of the day, it's not a grant; it is a loan. And
yeah.
You know, I think in the early days, certainly some of the, you know, it sounds like I'm being critical. I'm not being critical. You know, I think you know, it's in the early days there was some misunderstanding around that, shall we say?
Yeah, excellent. Very good. Does anybody else have anything they want to ask or cover? Again?
Yeah, just one question. It may have been on one of the previous slides. I just didn't see it. What's the criteria for being an SME for this scheme?
So it's turnover less than 45 million.
Yeah, that's right. Yeah.
UK. It has to be UK owned or UK domiciled, or trading in the UK predominantly as well.
Do you think there's, because I've heard that subsidiaries from overseas companies are sort of struggling to get the support and stuff. Do you, and I suppose that kind of makes sense, but do you anticipate any changes in there? Is that something that might be addressed, or is that just the way it is?
It's not something I'm aware. I mean, that's British Business Bank territory, because they set the criteria for that, and obviously with it being UK government backed, then there's going to be a requirement that it's UK based businesses. But yeah, that's probably a question for BBB rather than us. So,
Excellent. Okay. Anybody else want to raise anything, or are we happy with all of that? Cool. Well, if there's nothing from anybody, then thank you very much, Jon and Mark, both, for running us through that. What we'll do is we'll send a recording of this webinar to everybody that's registered as well, so you can watch it at leisure as well. And then obviously, if there's any further questions or anything, please feel free to get in touch with ourselves, and then we can try to support you and help you. I just wanted to sort of put in another reminder that our next webinar is actually on Tuesday next week, which will be around funding as well, and it'll explore some potential other options and some useful advice. So please, you know, sort of make sure that you join that. If you go onto the STC website, you'll see the details in the events calendar there. There's actually two webinars on the 21st, one from one of our ambassadors, Shivy Khanam, as well, which is all about business practices to help you through the current situation. So yeah, please sort of have a look at these. As I said, you can watch the previous ones on our YouTube channel as well. So please do that. And as I said, you know, we're always here to help. So please do get in touch if you feel that we can be of any use to you. And we'll do our best to help where we can. So with all of that, I'd like to thank everybody for participating. Jon, thank you very much for running through this and spending some of your time. Much appreciated. Mark, thank you very much for being here as well and contributing. All really good stuff. And thank you all for attending. Please sort of stay safe, have good days, and hopefully we'll see each other again soon.
Cheers, Pim. Thanks a lot.
Thanks, Pim. Thanks, Jon.
Cheers.
All right.